30K is a major psychological support level, and Bitcoin falling below this price naturally caused quite the worry for crypto people. Although, after the recent B-word conference, it's back above 30K at the moment. We can't actually predict what can happen next, but we can provide some info to put recent price movements in context. We'll start by remembering some historical fluctuations in the Bitcoin price. Then we'll look at the current situation, and finally, we'll make some comparisons and see if we can get a clearer sense of what could happen next. It's hard to get a sense of the price per Bitcoin in the early days, since the amount of buying and selling was extremely limited. The first really measurable price fluctuation happened in 2011, when Bitcoin's price jumped from $1 in April to a peak of $32 in June, spelling a gain of 32,000% over 3 months. That rocket ascent was followed by a speedy plummet in the crypto markets, and Bitcoin's price fell back down to $2 in November 2011, correcting the 32,000% gain to a 200% gain. Let's skip forward to Bitcoin breaching triple digits. Also, if you enjoyed this video, don't forget to do the old like, subscribe, and comment. It helps us out a lot. Alright, so Bitcoin began 2013 trading at $13.40, and few predicted the roller coaster year it was in for. The price shot up to $220 by the beginning of April 2013. As usual, that huge increase was followed by an equally rapid fall, and Bitcoin was valued at $70 a couple weeks after its peak. But 2013 wasn't done with Bitcoin. Another spike and dip occurred toward the end of the year. In early October, Bitcoin was at $123. Then, in December, it shot up to $1,156. But it fell to around $760 3 days later. This confirmation of volatility created a social feeling of skepticism and FUD, prompting a multi-year slump in Bitcoin's price, and by the beginning of 2015, it had touched a low of $315. Between 2015 and 17, Bitcoin's price enjoyed a relatively stable increase. Then, most of you probably know about 2017, when Bitcoin skyrocketed to an all-time high that seemed mind-blowing at the time, almost reaching 20K. By 2017, the whole market had changed. Plenty of altcoins already had a few years under their belt to confirm their position in the crypto space. And Ethereum had already come in and brought the new idea of smart contracts and Web 3.0 capability to the space. The 2017 Bitcoin price increase wasn't just about Bitcoin anymore. It was about the entire space of cryptocurrency and its potential to change the world. Totally new use cases were popping up, and crypto commanded the attention of regulators as it moved more firmly into the mainstream spotlight. Yet, the upward movement was too fast, and it primed the market for a crash. People look back and point to events such as high-profile hacks as the external blow that prompted the tumble. On top of that, governments were mostly giving crypto the cold shoulder and refusing to approve adaptation vehicles, such as the SEC's refusal to approve a Bitcoin ETF. Governments didn't stop at simply not providing additional support for crypto. The insatiable 2017 crypto craze actually prompted the implementation of stricter regulations around the world. To add to the regulations, the majority of corporate mainstream investors still maintained an anti-crypto outlook, which not only meant a lack of support from these rich entities, but also a lack of support from those who trust these entities to make wise financial decisions. Finally, we come to the most recent skyrocket and fall. This one probably doesn't need much explanation. It had a lot in common with 2017, an unstoppable craze following a couple years of drifting. New innovation, confused regulators, new kinds of scams, FOMO, and an eventual peak that was unsustainable in the short run. But you've probably heard people saying this time is different. Why? Because this time everything got taken a step further. Since the beginning of the year, there's been a record number of companies adopting crypto, either as payment method, a way to balance their savings, or both. On top of that, corporate investors like hedge funds have joined the most recent wave of adoption, along with the common man. This comes with its own problems, but it's still a good sign for long-term growth. Furthermore, government regulation is still playing a big part in the crypto space. And while the general stance remains rather cold, there have been signs of at least partial acceptance. with perhaps the biggest one being allowing Coinbase to go public on the stock market. On top of that, there have been some very crypto-friendly government moves from smaller governments, such as El Salvador making Bitcoin legal tender, and some states in the US taking a pro-crypto stance. As for larger governments, each time regulatory hearings have come up recently, they haven't resulted in any particularly hostile policies, at least in most Western countries. Now, one of the big factors people point to in the fall from the most recent peak is Tesla's reversal of their decision to accept Bitcoin as payment. This may not have hit as hard if environmental concerns weren't cited as the reason for the decision, but as Bitcoin energy consumption was already a hot point against crypto, the timing of the announcement really compounded the effect. If we look even more recently, we can see that China's ban on crypto mining seemed to keep the prices in a steady decline. The flip side of this, however, is that it has had a threefold effect on reducing Bitcoin's carbon footprint. First is the possibly short-term effect, which is that the drastic reduction in the hash rate caused Bitcoin to automatically adjust, so that currently the power needed to mine Bitcoin is roughly half of what it was in May. Secondly is the fact that many of the crypto mines in China had been around a while and were therefore using older, less efficient equipment. And such equipment as this was hardly worth moving to another country. Therefore, a lot of the less efficient equipment has been wiped out of the Bitcoin mining market. Thirdly, this forced exodus has accelerated the move toward renewable energy, because renewables are often the cheapest option for projects which are able to move close to the source. The trend of renewables has been to get cheaper over time, and social pressure means that major Bitcoin mining farms are hesitant to use environmentally unfriendly energy for their efforts. Finally, the most recent cause of the price fall that's hit the spotlight is the current regulatory scrutiny on stablecoins. If history is any indication, it's expected for price to fall when new regulations are being discussed. But at the same time, few are surprised to see stablecoins under scrutiny, as they propose to be backed by central bank currency. The price may fall while the outcome of the scrutiny remains unknown, but if the regulations aren't overly harsh, then the chilling effect is likely to quickly dissipate. Not to mention, the recent B-Word conference with Elon Musk and Jack Dorsey saw Elon once again taking a pro-crypto stance, which seemed to cause a solid price jump back over 30K for Bitcoin. Finally, the most recent cause of the crypto price fall that has seen the spotlight is the current regulatory scrutiny on stablecoins. If history is any indication, it is expected for price to fall when new regulations are being discussed. But at the same time, few are surprised to see stablecoins under scrutiny, as they propose to be backed by central bank currency. The price may fall while the outcome of the scrutiny remains unknown, but if the regulations aren't overly harsh, then the chilling effect is likely to dissipate quickly. Okay, today we've only looked at external macro factors. I should mention real quick that many technical analysts see a further drop brewing before we reach another point of support. On top of that, we've only briefly touched on some specific points. As always, it is important to do your own research before making any financial decisions. To wrap up, it's not guaranteed that Bitcoin will never die. But we've seen it pronounced dead many times over the years, and so far, it has always come back stronger. It's normal for times of intense growth to be followed by a significant dip. But so far, each time of growth has accumulated more macro support for crypto. So while short-term predictions are hard to make, and even long-term trends aren't guaranteed, Bitcoin history is full of comebacks. Thanks for watching this video. See you next time. If you don't have a Phemex account yet, just click on the link in the description or scan the QR code on the screen. Create a Phemex account and you'll get a 7-day free premium membership trial and other trading bonuses. To learn more about Phemex and cryptocurrencies, watch the videos on the box on the left. And if you're new to the crypto world, have a look at the videos on the right for some of Phemex's user tutorials.